thank you this evening, everybody, for taking the time to listen to our story, and thanks also to the Investorium folk for putting on this venue. I think it's something new and terrific. Well done. That's our standard disclaimer that I'm sure you'll memorise as quickly as I leave it there. Quite longer than that's better. Thor are listed on ASX and also on the AIM board in London. We are an English company, a PLC company, and we've been around for about 5 years. With me, our board is there. With me tonight is Trevor Ireland, one of our directors. Trevor's a geologist, and when we start to depart from script later on, we'll talk about our gold investments. You might remember that Trevor was the exploration manager for the discovery of the granites and the Calais gold mines in the Northern Territory. Also with us tonight is Dave Thomas, who's working with us developing the feasibility study for our Molly Hill tungsten project that we'll talk about in a moment. Our market cap is relatively skinny at around about 12 million Aussie, and over the next few minutes I hope I can convince you that at this price we're a very, very good buy indeed. We have 3 projects we're going to talk about tonight, in particular Molly Hill, about 4 hours drive from Alice Springs, Spring Hill, a gold project just south of Darwin, and the Dundas project in Western Australia. We'll start off with Molly Hill. It is a tungsten and molybdenite project with inside a magnetite skarn, and as I said, it's about 4 hours drive from Alice Springs. It is our intention over the next little while to produce a feasibility study and bring Molly Hill into production in the latter half of 2013. As I said earlier, Molly Hill is tungsten, molybdenum and magnetite. The tungsten appears as scheelite. In other places it may appear as wolframite. We have scheelite. This graph shows the metal price over the last few years, and around late 2007 into early 2008 the molybdenum price was up here at what we would call stratospheric levels, and then the global financial crisis did just exactly that to the price, and a project that was ready to mine in late 2007 was put on hold. Over the last few years, since then, the molybdenum price has recovered a little, but the tungsten price has soared. It now stands at about $450 US per metric tonne unit, with the molybdenum price at about $15 a pound. Now, it's probably worth drilling on, for those who don't know much about the tungsten market and about metric tonne units, about where that sits in the scheme of things. At $450 a metric tonne unit, it's effectively $45 a kilo, or just over $20 a pound. If you can compare that with copper at around $3.50 a pound at the moment, this is a relatively high value metal, and you don't need an awful lot of it to have a resource that has a reasonably high value. The same with molybdenum at about $14 to $15 a pound. Again, compared with copper, it's got a pretty good value in the ground. What is tungsten used for? It's one of the hardest, if not the hardest metal around. It's used in high-tech tools, mining equipment, drilling tools. It's also used in defence. Every armoured vehicle in the defence industry has a cladding that has a certain amount of tungsten on it because it's so hard. It's very, very wear resistant as well, and also steels and alloys. There are no substitutes or no substitutes of note for tungsten, and thanks to our friends in Asia, the usage of tungsten is projected to continue to grow. It has grown quite steadily in the last few years, as you've seen from that price graph, and it is projected to continue to grow at about 6% per annum for the next few years. This is our resource statement. We have about just under 4 million tonnes of this stuff at about 0.3% WO3, which is effectively which is scheelite, and about 94% from memory tungsten. About 0.2% moly, and it's also there we have a reasonable amount of magnetite hosted in the iron ore. We are currently working on a feasibility study. We expect that'll be finished in the next few weeks. We have a schedule that says we'll be in development in the second half of next year, a 12-month production process, and off we go. We are helped. The environmental work is done. That was done some years ago. We've had confirmation from the department in the Northern Territory that we don't need to do any more environmental studies. That's under control, and we have agreement with our friends, the traditional owners, to go ahead. The impediments to mining are very few indeed from now. This is what we plan to operate at. Relatively low volume, 400,000 tonnes a year, and producing a couple of thousand tonnes a year of scheelite concentrate and 1,000 or so tonnes per year of molybdenum concentrate. These are not high volume, as you know. It doesn't sound like much, but just remember those values. Those values are quite high. And at these prices, we will be producing revenue of about 70 million tonnes a year against a cost base of about 30 million, just over 30 million a year. That's the order of magnitude of the economics of producing these concentrates in these volumes during the life of the mine. The progress on the feasibility study to date, we have estimates of capital costs, of operating costs by third parties. If you bring it back to per metric tonne unit, our revenue is about $360 a metric tonne unit against a cost base of about $130. That's not a bad margin. The next stage is to update, and we are in the process of updating the ore reserve with these new operating and capital cost parameters, and also in light of the current metal prices. And a mining plan that will come out of that. We'll then be plugging those numbers into our economic model and producing an outcome. From there, we've got to pay for it. Capital cost of $66 million. We don't have that in the bank. There's no secret to the fact that in the last couple of months I spent as much time in Asia, in Japan, in China, and in the UK, looking at finance and looking for finance for this project, and also looking for offtake agreements for the tungsten and the molybdenum concentrates, because these are not products like gold and copper that you can sell as soon as you get them, as soon as you produce them at the gate. They have to be marketed, and that process has commenced. And as I said earlier, the development plan says we start development in the second half of next year, start production the second half of the following year. Stepping away from script a bit, that's the end of Molly Hill. We'll now talk about the Spring Hill project, just about 150 kilometres south of Darwin. We hold 25% of this project, but we have the rights to take that equity up to 80%. It has an indicated resource, according to the 1999 JORC code, not the current JORC code, of 3.6 million tonnes at 2.3 grams, about 270,000 ounces. The things that are going, amongst the things that are going for Spring Hill, it's very close to infrastructure. The Adelaide to Darwin sealed road is about 20 minutes away. The power line that runs south from Darwin is about 2 kilometres away from where we were just finished drilling in the last week or so. There's a rail link, a rail line about 3 or 4 kilometres away, and a couple of small towns within half an hour. things of this nature make bringing a gold mine into production probably $10 to $15 million cheaper than if you were out in the bush a long way from anywhere. The resource, as I said, it's according to the 1999 JORC code, there's 274,000 ounces there. That's at a cut-off grade of 1 gram per tonne. If we reduce that cut-off grade to half a gram per tonne, and a lot of people nowadays are mining at considerably less than that, that resource goes to 404,000 ounces. This is not a tiny thing. It is a reasonable sized resource, and we believe it has the potential to grow quite quickly. On this slide, on this side, this is a plan view of the zones of mineralisation or of the resource at Spring Hill. There's 4 zones there, all close together within about 400 metres of one another, and we have been drilling in the last few weeks this lode, the Hong Kong zone. To the south and also to the north, but not on this screen, a number of workings from historical mining that we have not yet had that nobody's had the opportunity to drill, because it's the topography is pretty steep. It's pretty hard to get at. But we plan to test those in the next year. Just to about a kilometre to the north, some historical intersections. There's 16 metres at 4 grams there. Never followed up. They were drilled in the mid-90s. When the gold price is $1,700 and something an ounce, we'd certainly be following up on 16 metres at 4 grams nowadays. This is what we call a long section for the non-geologists in the group of the Hong Kong zone that we have just finished doing some drill work a week or 2 ago. And the Hong Kong zone comprises the bulk of the mineralisation at Spring Hill. This was ruled off about 130 metres below the surface back when the resource was estimated, because back in the late 90s and early 2000s, anybody contemplating an open pit mine below 100 to 150 metres at these grades had rocks in their head. It wouldn't work. When the gold price is about $1,700 an ounce, maybe you can go a little bit deeper, and that has been the objective of the last drilling program, and the results of those, we'll have them shortly. Watch this space for those results. Elsewhere at Spring Hill, we believe, and as I said, Trevor Island knows a little bit about Kelly and the granites earlier on. We believe there is the potential for a much larger, much deeper ore body at Spring Hill of the Kelly style. Now, Trevor tells us, and the Northern Territory Geological Survey confirm, that the geology and the geological history of the Pine Creek area that hosts Spring Hill is exactly the same as the Tanami, which hosts Kelly. The difference is Kelly is an ore body of 5 or 6 or several more million ounces. We have not yet discovered one of those in the Pine Creek area. If one did exist, it would be, and here's the Spring Hill mineralisation in the lithology up here. If one did exist, it would be down here in what is known as the Kulpin Formation. It is a bit of a leap of faith to say it's there, but next year we plan to step back with a bit of geophysics to help us and put a couple of holes in there to test this theory. This is a map of the tenement. We know the Kulpin Formation exists in the area. There it is there, this grade. And we know that it dips down underneath Spring Hill. Up here it's not mineralised, but the gold near surface at Spring Hill had to come from somewhere. It didn't come from above, and I suspect it didn't come laterally, so maybe there's a whole lot of gold a little bit further down. It might be rather deep, and we might miss it, and it might not be there at all, but it's certainly a target worth shooting for. Moving on to Western Australia, the Dundas project in the just south east of Norseman in Western Australia is something relatively new. It's a greenfields exploration opportunity in an area that has almost never been explored before, because the area down here at Dundas is in a reserve where mining and exploration activities was prohibited for a number of years. That prohibition has been lifted and we can now go in and explore. The exciting thing about Dundas is that it's on the Albany Fraser belt. Other people call it the Tropicana belt, because right up here at a couple of 100 kilometres away is Tropicana, which is now several million ounces. And this is a geological map of this part of Western Australia. The Albany Fraser belt coming down here, the Wiluna, Kalgoorlie, Norseman belt coming down here, all more or less meeting around where our tenements are here. This is a magnetic map of the same area, featuring the magnetics with the Dundas area just on this little kink in the magnetics down there. All things that indicate this is a pretty interesting place to explore for gold. No guarantees, and it's very early stages yet, but there might just be a reasonable sized gold project here at Dundas, and we're spending some money doing some work to find out if that is the case. So far we've done a whole bunch of geochemical sampling. We've got a prospect there that we've done some shallow drilling in that we want to follow up. We've got some more prospects here that we're going to do some more drilling in the next little while, and as I said before, watch this space. There might be some pretty exciting news coming out of Dundas. In summary, for a company with a market cap of about $12 million, we've got a project that where the feasibility is almost ready to complete, where we think the economics are relatively exciting. We've got equity in a gold, right to 80% equity in 274,000 plus ounces gold at Spring Hill. We've got the potential for a large gold project as well at Spring Hill. We've got greenfields exploration at Dundas. We think we're worth a little bit more than $12 million, and I hope you think so too. Thank you.